Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will move to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the big players in the market are doing, so essentially hedge funds. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong level of previous monthly resistance, which was acting as resistance here, preceding the creation of this red candle, which the market then broke to the upside and at that point started acting as support. We can see how again the market respected this area as support here. And at the moment, the market is once again testing this area as support. And there is the possibility to see a potential rejection to the upside away from this area. Now, dropping down on the weekly, what do we see? Well, from a weekly perspective, we can see how this zone was acting as previous weekly support. In fact, from here, this rejection to the upside was created that is currently once again acting as support at this area. We can also notice how we have an impulse followed by a correction. And in general, after an impulse, if you want to measure a correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just retraced precisely to the zone, which is in between the 0.618 and 0.786 of the Fibonacci taken on this weekly impulse, which is a quite strong level of weekly demand and support. And from here, there is the possibility to see a potential rejection to the upside away from this area. Now, if we go down on the daily time frame, what do we see? Now, here in the daily, this is where things get quite interesting. Now, I did speak about USDJPY a few days ago after the market had created this W formation. I explained all the reasons for which from here we could expect this rejection to the downside, which is now exactly what the market gave us. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. However, at the moment, what we can notice is that in creating this move to the downside, the market is currently now testing a quite strong daily demand and support area. In fact, this is the zone from which the market created this red candle, meaning that here the market had found resistance. Now this previous resistance is turned support here. And in reaching this area, which by the way, if we look left, we can see how it was also acting as previous support here. The market is also creating an M pattern. And in general, after the creation of an M pattern, what we could expect is a potential rejection to the upside for the potential completion of the M pattern at the neckline, which is previous support turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the JPY, what we can see is that with the last reports, net positions have been decreased. We went from having minus 20k net positions all the way down to having minus 66k net positions. So clearly, the JPY has been getting weaker, meaning that institutions have been moving to the more bearish side for the JPY. Now, this makes the JPY makes the JPY weaker, which means that USDJPY, it makes it stronger. And USDJPY getting stronger is exactly what we need for the potential completion of this M pattern at the neckline. So this increases the probabilities, since the JPY is weakening, that USDJPY could create this rejection to the upside, completing the daily M pattern at the neckline. So how we could be approaching this potential rejection to the upside? Now, As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the completion of the M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is the one precisely that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, you will see that at the moment there is a massive special promotion in which you can get completely free access to the mentorship program with very easy 3 steps. So I really suggest that you go and check it out, at least at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.